All right, Senator, let's talk about your bill, the Crapo-Johnson bill. It's been getting some criticism from various conservative corners, and I'm even seeing advertising. They're calling it the Obamacare of the mortgage industry.
Yeah.
And we actually have interviewed a couple of people on that side. One of them, I guess I had a little bit of trouble with because he was representing clients who were directly financially going to be hurt. At least he felt, because they were invested in Freddie Mac and Fannie Mae. And then there's some there's some criticism because there are conservative groups that feel maybe you're not going far enough in order to fix the problem. So I guess
that's right.
you're not used to having to fight off conservative groups, but in this case you are. Give us your thoughts.
Well, you've laid it out pretty much just right. There are folks from the left and folks from the right who are critical of the bill, and there's an investor group that's very critical of the bill. The bottom line, though, is with regard to the attacks that are coming from the conservative side, I think they're just I wouldn't say misinformed, but they are missing a point. They would like us to just have the entire government involvement in regulating the mortgage industry eliminated. And although that might be a nice solution, it's not a politically achievable solution. And so what we are doing is we're moving the ball as far as we can in that direction. And I think, frankly, our bill moves it almost all the way there. Right now, I'll paint it this way. Right now, you have a situation in which the federal government has taken control through conservatorship of Fannie Mae and Freddie Mac. That is virtually, that plus the FHA, is the government controlling 95% of the secondary mortgage industry in the United States. That's $5 trillion worth of mortgages, and the U.S. taxpayers are first in line in risk for the security of that system. What we do is we tighten up the mortgage standards so that only more qualified and properly underwritten mortgages can be involved. We require the private sector to move in with a 10% risk protection. We require mortgage insurance so that, or down payments to create an 80% loan-to-value ratio. And then we create a funded emergency fund for problems. And the upshot of it all is that if some of the analysts who've analyzed this say that we have protected the taxpayer from probably a crisis 2 or 3 times as big as the one we just went through before there would be any taxpayer risk. And so I think it's a very good bill.